Hey, welcome everybody to the 40 Finance channel. My name's Jeff Beers. Today we're going to dig into ROKU stock. It's currently trading around the $150 mark. And we're going to talk a little bit about the short-term outlook and the long-term outlook with ROKU. Try to determine, is $150 a good place to get in on ROKU? And what are the prospects for ROKU's user base and revenues going forward? Reminder, as always, my stock picks and projections are just my opinion for your entertainment. Please talk to an investment professional before taking on any risks in the stock market. As always though, if you enjoy stock market analysis like this and other personal finance topics, then please subscribe to the 40 Finance channel. Thank you everyone so much for supporting the channel so far. Alright, so ROKU just announced their earnings report 3 or 4 days ago, and generally speaking, a lot of the user metrics were good, account ads, streaming hours, things like that. Being a growth stock though, they did however post a net loss. That loss was less than what analysts expected. So you kind of get this murky positive earnings report when you didn't lose as much money as everybody thought you would. But that's the nature of many growth stocks, and ROKU is certainly in that game. They do have some profitability potential depending on when the world kind of gets back to normal, so to speak. There's speculation that they could hit EBITDA profitability late 21, 22, something like that. All right, taking a look at the stock today. This screenshot was from last night, so 156.39 for the stock price. It actually this morning is trading closer to 150. But you got a 52-week range of $58 all the way up to $176. So it definitely has a wide range. Obviously on the low side with the pandemic and the stock market crash. But generally speaking, it was trading in the neighborhood of $100 or so, and then took a recent jump up. No PE ratio with the stock like this, no dividend, and earnings per share right now sit at a negative $1.16. All right, so one of the hardest things to do with any type of growth stock is to try to come up with the valuation, and then furthermore, try to think about that valuation in terms of stock price. This is what makes growth stocks so interesting, right? And then they're often a momentum play where people just get behind the idea, and you're looking at, things like account metrics to try to determine what you think's a fair value. However, I always look at the valuation trends across time and try to see if we can eke anything out of the numbers from the past several quarters, and that's what we'll do here. This chart from Yahoo Finance basically tracks the results from the last several quarters. You can see in the red box there, we don't have any PE to work with. We don't have any PEG to work with, so we're kind of limited. However, we do have price to sales and price to book. And from a historical standpoint, just eyeballing price to sales, it's running, at the higher end of what we've seen in the past several quarters. However, it is not at the high. And then from a price to book standpoint, that actually is coming in a little bit lower as the account user base and technology starts to get more of a real valuation. So that by itself is a mildly encouraging sign. All right, so now that ROKU has posted some earnings here recently, it's time to take a look at the TipRanks dashboard to see how the analysts kind of looked at things and what their projection is for the future. Shout out to TipRanks. I am a paid subscriber. My affiliate link is in the description if you're interested about learning more of what TipRanks does and how they rank and chart analysts and potentially support the channel at the same time. All right, real quick, if you're not familiar, off to the left is the Analyst Profile. I always sort by analysts in the 4 to 5 star range based on TipRanks analytics. And then far off to the right is the date that these price updates came in. We'll focus on the middle where I've highlighted in yellow. You can see that we've got, almost a split on buys and holds. and your price target range is anywhere from 145, or actually there's one 115 bear down there, but mostly you're in that $150 to $200 range. Got a handful that see the price target about the same of where we stand today, and then you sort of have the bull camp that sees things, going up to a 185, 200 level. All right, so for this video, I want to dig into, how Roku makes money, what is their business goals, and how does that all look as we project ahead in the future. I'll try to breeze through all this text here very quickly, but I just wanted to share their business model so that we can understand the financial analytics going forward. So this is right out of Investor Relations. They have 3 core activities. Number 1, which is the very top there on number 1, increasing number of active accounts. Number 2, increasing user engagement and growing the hours of content streamed. And then 3, growing our revenue and gross profit by monetizing user activity. So those are the 3 goals, and then how they achieve those is down a little bit further. The second, number 1, to increase active accounts, we sell standalone streaming players, work with TV brand partners who license the Roku operating system, and sell Roku TV models. And we also license the operating system to certain service operators. In order to achieve business goal number 2, which is the growing of the engagement, they invest significant resources to improve user experience on our platform. This includes improvements to navigation, search, and discovery, as well as increasing the depth and breadth of our content offering while also enhancing the overall streaming experience. All right, so now part number 3 of the business model, and this is where the revenue starts to come in. We generate revenue by monetizing our users' engagement, including video advertising, ad-supported channels, sale of subscription services, and other commerce transactions, brand sponsorships, promotions, and billing services. All right, so sort of the long story short, Roku is focused on growing their user accounts, which obviously makes sense. They also spend a significant amount of time on making sure that those accounts are engaged, have a great experience, and continue to want to come back to the platform so that the hours that a user puts into an account grows substantially. So creating the user account kind of leads to revenue in the standpoint that they likely bought a Roku stick, a Roku TV, or something that runs on the operating system. So that's the front end revenue, just having sales of the operating system in more than one format. Then you have this middle ground where Roku has to invest a lot of resources in order to keep engagement up so that users continue to come back, they enjoy it, they get addicted, so to speak, and they're finding things that entertain them. Once that ecosystem is kind of settled, you start to get into the revenue side, which is a combination of ads that happen on the free-to-stream platforms such as Roku Channel and Freeform and some of these others. But then there's a back end that people don't talk about as much, which is when Roku sells a streaming service, call it Disney Plus or whatever, they either get an affiliate commission because they feature Disney Plus in certain places and people end up buying, or they have some kind of revenue share in place with these big distributors. And finally, you have this billing segment where some of their partners can actually opt into sort of a Roku billing. Think of it like, you're selling products, but Amazon checks it out or runs the checkout and all that. So you have a streaming service. It sits on Roku. They promote it. Roku will bill it and handle all the subscription agreement stuff, and you actually just collect profits on that. So all of these things tie in together incredibly well, but they do bank on the growth of user accounts, and they do bank on the growth of user interactivity. All right, so let's take the business goals and look into the most recent quarterly report and see how Roku is doing. All right, so we've got my color-coded eye charts here again for you today, but I think it'll make sense and we'll go through this very quickly. Let's start at the top left. Number 1 in green, increase accounts. And I highlighted below in yellow, Roku added 3.2 million incremental active accounts in Q2 to reach 43 million. I put another note in black at the top, and this is kind of what surprised me. They added 4.6 million in Q4, which they'll admit Q4 is their best quarter traditionally. I was just kind of surprised with the streaming world, I'm guessing, being at a peak, that they didn't add more than they added in Q4. So 4.6 million in Q4 actually dropped down to 3.2 million during the height of the pandemic. To me, that's surprising. Number 2, increasing engagement. Streaming hours increased by 2.3 billion hours over last quarter, which is great. If you go down to the spreadsheet and you look at the purple boxes, Q2 of 19, you had 8.8 billion streaming hours. Q2 of 20, you had 14.6 billion streaming hours. And I was curious, so I did the math. That's what that line is. That equates to 288 hours per user in 2019 Q2. And now you've got users up to 339.5 in Q2 of 20. So that's pretty substantial. I was worried for a second, if you add accounts, of course streaming hours are going to go up, right? But what's our baseline average? And that's what that little notation is there. Okay, back up to the top in orange, increase revenue and average revenue per user. And Roku total net revenue grew 42% up year over year to 356 million. And you see I highlighted down below in the first set of orange boxes, Q2's ARPU in 2019 was $21.06. That jumped all the way up to almost $25 in Q2 of 20. So really nice to get more money out of each customer. And then if we go down to total net revenue, we had 250 million in Q2 of 19. That turned into 356 million in Q2 of 20. Okay, so, generally speaking, I think Roku hit all of their business goals. There's some things that held them back, and most of that was due to ad revenue being down in a time where, of course, many advertisers are restricting their spending just because things aren't being sold. I'm not exactly sure why the account growth wasn't better. Maybe that's just my expectation, but one theory off the top of my head is perhaps people weren't buying TVs, right? Because Walmart was closed or whatever the circumstance was. You also have unemployment, so maybe consumer spending held back on what typically, in my opinion, should have been a good time for platform purchases, which of course turns into higher accounts created. Now looking ahead for Roku, let's dig into their outlook over the next 1 or 2 years and see where the concerns are and try to put our pulse on where this company's going. All right, so this is what at the end of the shareholders letter, it's their looking forward statement. Not a lot of surprises here, but let's take them from the top. Top right, yellow line, increasing prevalence of COVID infections during back to school and holiday seasons greatly inhibit our ability to forecast. Q4 is seasonally largest quarter for Roku, and there is a wide range of potential outcomes given increased consumer interest in streaming on the one hand and the possibility of retailer, supply chain, and advertising constraints at critical times on the other. Next, they call out the ad industry outlook remains uncertain for Q3 and Q4. We believe that total TV ad spend will not recover to pre-COVID-19 levels until well into 2021. And finally there, overall revenue will grow substantially on a year-over-year basis in the second half and for the full year of 2020, albeit not as strongly as we had anticipated prior to the pandemic. All right, so kudos to Roku because they're basically writing it on the wall for you. If you bought in, let's say in January, with a game plan that Roku would grow XYZ on ad-supported dollars, TV sales, all these things, they're still expecting growth. I would say fairly confidently they're expecting growth, and they've proven growth over the first couple quarters. But they're telling you right away that growth is not going to be on the same level that they projected way back in January. Furthermore, their big quarter, which is Q3, Q4, back to school into holidays, they definitely are concerned, not only from advertising dollars, but I think from an overall consumer spending standpoint. Now, some of these concerns could evaporate, right? If there's a vaccine or a therapeutic or a lot of other scenarios. However, you do need to be aware that we are sort of on a shaky ground for growth in Roku over the next 6 to 12 months. All right, so bottom line for me, it was a good quarter. It wasn't a great quarter. I personally expected the allure of streaming and cord cutting and all those things to boost accounts by more than the 3.2 million. That could just be me having high expectations, but it didn't happen. The one thing that did happen though was streaming hours per account went up substantially. That's not necessarily a surprise, but it was good to see that they went up and that ARPU number, revenue per user, also went up fairly well. I believe that year over year was $21 to about $25 per user. That's an encouraging sign. Number two, short-term ad dollars and potentially the sale of platforms within the televisions, the sticks, everything else. Those have a pretty uncertain sales outlook right now. I don't know what to think about ad sales heading into holiday shopping season. There's a side of me that thinks maybe holiday shopping ads will continue to run as normal. They're just not going to have the same names and faces in there. But depending on where that lands, if it's a negative, all these great things with hours per user and ARPU numbers basically get offset and lost in the earnings report. Number three, and I think that this is the big question for Roku investors, certainly at least new investors today. Does the streaming momentum continue through the end of 2021? Right? So the case for streaming is well known, cord cutting, all those things. How many people took advantage of the pandemic time to jump into that world? And are we actually seeing inflating streaming numbers because of the lack of entertainment options outside of television? For example, sports and hiking, outdoor activities, all those things. Do you think streaming continues from a new account standpoint to grow when all of this COVID stuff goes away? Bottom line for me, I like Roku. I have several Roku televisions. This is a Roku television. I would buy in, but I need to get it at a better price. That price to me is probably at $120 or less. To get it at more of a distress sale, because I don't think that this company is running on all cylinders. I think we have some distress and therefore we should be getting a discount. The one place I do have some Roku exposure right now is in an ETF with ARK, the ARK Innovation Fund. They have some exposure to Roku, so I'm not completely missing out if this thing does a colossal 180 of some kind. All right, guys, so that's my take on Roku after the earnings report. Let me know if you enjoyed it in the comments. Please give me a like and subscribe if you enjoy the channel. We'll see you on the next video.